Hi there, I'm Russ Horn, and I would love to show you my favorite reversal pattern called the wedge formation. Now, this is a bullish wedge, and this is a bearish wedge. The bullish wedge starts out with the price ultimately going downwards. However, the upper part of the price is going downwards a little more drastically than the lower part of the price. We can draw trend lines that connect the swing highs across the top, and we're going to get a certain angle. And then if we draw a trend line that connects the lows, we're going to find that the angle isn't as pronounced. It's flatter. This means that even though the market is trying to push down, there is so much support that the price just can't get much lower. There's more downward force, but the push upwards is becoming more and more aggressive. Now, with a bearish wedge formation, we have a trend line that we can draw across the top, which would be quite flat or less of an angle than the trend line we can draw across the bottom. Price is trying to go up, and it has a pretty good push upwards, but it kind of hits a wall and can't get much higher than its previous highs. And there, the market changes direction and will ultimately give way. The market ends up going down. Now, we can see a couple of examples of this on the chart here. So I'm going to draw some trend lines, and I can see that we've got 1, 2, 3 really nice points of contact, and we have a certain angle to this trend line. Now, I've got a couple of lows at the bottom that I can also connect, draw a trend line to connect those. And what I'm seeing is this pattern. We've got the trend line across the top, which is sloped quite aggressively, where the trend line across the bottom is not. It is quite flat in comparison to this other trend line. Market is trying to push down, but just can't get much lower, which means at some point, the bears are going to take over and push the price up. This is a bullish wedge formation. That's what this one here is, this graphic here. So if I connect the highs, I get a certain angle, connect the lows, the angle is flatter. So it's almost like a level of support. It's a little bit of an angle, but it is acting as support. Now, the way to trade this is when the price closes above the upper trend line, I'm going to take a look and see how far the widest part of this formation is. I'll change the color for this so we can see it. And I'm going to duplicate that to the breakout point. So put that in here. So this becomes a target. So I get a close above the trend line. I want to target the same distance as the widest part of the formation. So at this point, we could be looking to get out of the trade in profit. Now let's take a look at a short version or a bearish wedge formation. Again, we are making swing lows that are quite aggressively getting higher and higher, but the swing highs across the top really aren't giving way in the same way that the swing lows are. And I've got this area in here where the price has moved up and we can see has been turned and is moving down for a little bit. So I'm going to connect the swing highs that I see, and I'm going to connect the swing lows. And what we've got is a perfect bearish wedge formation. Close below the trend line gives us the signal to go short. And if I look at the widest part of this formation, I'll connect the high and the low, just the width, duplicate this indicator. And then from here, I can see how far I can target after this signal is given. So this distance is going to be from the trend line to the target. Price is going to drop a little bit below the trend line. That will be the trigger to go short. And then from there, we can trade this to the widest part of that formation. This is a great indicator of market potentially reversing. This is one that I look out for the most. This is my favorite reversal indicator. Again, this is called the wedge formation.